Hello everybody, what a day today for the Bitcoin price, touching 29k and retracing back to 27k. Actually, what amazing weeks we had before us. Bitcoin making a rally from 15-16k up to 29k. It almost doubled in some weeks. My name is Evangelos. You can find me on Twitter as Crypto Meditator. CryptoMedit is my handle. You can see it here. And I'm here with you to see the market today, but in general to see the market according to Wyckoff's logic. Richard Wyckoff was a great investor, great analyzer, great trader, and he gave us so much knowledge, theory and methods to see the market. Today we will see Richard Wyckoff's logic, the four phases of the market, but we're gonna stay mostly in the accumulation phase that I believe we are right now in the accumulation phase and we are breaking out. But before go there, let's see what we have right now the last days for Bitcoin. Let's dive into the charts. We've seen here for the last months Bitcoin having a rally from 16k up to 29k, and that's actually a part of an accumulation phase, of a sideways phase that we can see in Wyckoff's logic, that he calls that as an accumulation phase. So what the Richard Wyckoff's logic says for the market, we can see it here. We have the accumulation phase, we have the markup effect, we have the distribution phase, and then we have the markdown effect. With simple words, accumulation phase. Richard Wyckoff saw the investors, he split the investors in two categories: the smart money, big money, and the retail investors. The smart money and the big money, the market makers, they know when to buy. They're going to buy when the price is lower, and they're gonna drive the price up and down to fool the retail investors and manage to absorb their liquidity and take some liquidity from them, because at the end of the game the market's just a liquidity hunter. The one is trying to take money from the other, and most of the times the big money are taking money from the small money and they're becoming bigger. So simple words, accumulation phase, where the big money are accumulating the assets. This drives up the price. Bull market, then there is the top where the big money, they're selling their nice profits, and then we go to the bear market. So let's see where we are right now, and let's see how this logic was printed to the previous run. So we can see here accumulation phase, the price is going sideways. Then the price is going out of this range. As we can see, accumulation phase, the price goes out of this range. You can see it here, and it has the markup effect, the bull market. Let's zoom out a little bit. You see, we go out of the range, and then we have the markup effect, the bull market. Then we have the top. We have here a point that the smart money that accumulated in low price, like in 3k or so, selling at 60k. What is happening? Everybody's bullish, everybody's buying. We hear 1 million BTC, 200k BTC, and this is a perfect time for the smart money to dump their tokens into the retail investors that they're gonna give liquidity late. They're gonna give liquidity late at 69, at 68, at 65. So we see the smart money buying low at 3k and selling for 20x profit here on the top. And then look how similar this looks. The distribution here looks quite similar with the distribution here. Or you could say that there were two distributions. One here, that we had multiple cells, like 1 cell, 2 cell, 3 cell. Then we went down, reaccumulation, and then again 1 cell, 2 cell. And now we have the real markup effect, the real bear market, going all the way down here. Today we're gonna focus on accumulation phase and the first part of the markup effect. I believe that the Bitcoin bottom is in, and this is not a financial advice. Actually, nothing is financial advice here. I'm just making this for recreational purpose and educational purpose, if you want to see it like that, or just to share with you my thoughts about the market. So I believe that the market bottom was somewhere here as a fake out from that accumulation rates. And actually, if you follow me on Twitter, that I suggest you to do, you can see it here at 10 of January. That's exactly here. I said the term hodl is only valuable in one of the 4 phases. We should hodl our tokens in one of the 4 phases. Let's go to the full tweet. We have here accumulation phase, markup effect, distribution, and markdown effect. Accumulation, bull run, top, bear run. We should hodl our tokens only on the markup effect, only on the up only. Here you don't want to sell early, you know, when we are start going up, you just want to hodl your tokens because we have all the run in front of us. Here you want to start selling. How you will find it? You will find it, you will feel it, you will feel really euphoric, you will see that the price won't be able to make new highs. So the hodl term is for the phase of markup effect. I said it here, I felt it here, I saw this channel breaking, I saw this fake out, I heard everybody calling 9k, 11k, 12k, and I said here, hodl, accumulate, even if we go lower, accumulate, and then we have all the run in front of us. It's not the time to sell now. Anyway, let's see how this looks as accumulation, Wyckoffs accumulation phase, and what to expect. Here we can see the accumulation phase, this phase here, how similar it looks with the price action here. Look, it's going down here on the selling climax. We have the sideways move here, we can see it here. Then we have this fake out here, low volume sell off. Exactly here was the FTX, huge volume, people went really in fear, and a lot of liquidation from the long of Caroline here, and a lot of FTT liquidation made a huge volume spike. But then we have the low volume sell off that you can see it here. The price starts making lows, but there's no volume, and then we go up. We go up, the late shorts are getting punished. People that open short here waiting for 11k or so, they start getting liquidated, and then we are making the sideways range. Then we test the 25, that was a really important barrier for the bears, as I told you, and then we found the pullback. On this pullback, people went bearish again, under 19, under 20, they start calling for lower, and of course the market pierced through to the upside. What we have now, we see now that we're breaking out of this channel, and this is a sign that we're gonna start the run. But what happens, as you see here, when we break out, most of the times we have a pullback, and the pullback, according to the text, it is on the previous resistance, and we want to flip this resistance now as a support. But why do we have that pullback? We can see it here. Here we can see that the price is going up, but the RSI is going down. This is called bearish divergences. And when you see on the daily time frame bearish divergences for 1, 2, 3 times, third, fourth time you should be a bit worried to see the pullback. So what do we have here? Here we see the bearish divergences playing out, and most of the people are expecting a pullback here to the previous resistance to flip it as support. But what might happen? The market makers might first drive the price a bit up to that wick to stop this shorts and punish the late shorts. So we might see something like that here playing out, and then we might see the true pullback to 25. A lot of people are going to wait for 25. Why? You can see it here on the textbook. After the breakout of the sideways channel, we can see that it comes to flip the previous resistance as support. A lot of people are gonna buy here or open longs here, so we might see here a jump. But what I believe it will happen, then we will dive even more further around to 22.7k. And why? Because here we can pull the fib and we can see exactly that is the 0.618 level. And I believe somewhere here, or maybe a wick lower to 22. They will drive down the market. People are going to be bearish again. They're going to be say, okay, that was a fake out. We went out of the range and now we are dragged in the range again. So what's happening? We go lower, and then the market is gonna turn again. It's gonna liquidate all of these people, the late shorts and the sellers. That's what I believe we're going to see soon. That's for the short mid-term, and we can see a little bit the EMA moving averages, exponential moving averages, and how they indicate the maybe start of the bull market. Let's see it in a fresh chart, and let's see what happened in the past and what's happening right now. So here we are on a fresh chart, and we put the EMA. For me, it's a really important EMA, the 200 EMA, the green one you can see here. And we see even on the daily, all this bear market, we are behind that. And now we're breaking above that. But let's see a bit stronger indication. You know, when you are in a higher time frame, all the indicators are way more strong. So let's go to the weekly. And let's see what's happening on the weekly. We see that the previous run, all the run we were above that green. And let's go back to 2013, 2017. Look how much you have to zoom out here. So what we see here, that as long as we are above the 200 EMA on the weekly, the price is driving up in long term. It's driving up in long term. We see pullbacks that might be 60% or so, 30%, 40%, but still the long term is going up. So here we are on 2016, and we see we are above, and we go up. We start from $300 or so, and we top out at 20k almost. And then the bear market starts. We go below that. And then when we break above again, then we see exactly a run to 13k this time. Then we have the Black Swan event. We broke a bit, we touch below it, and then we have our latest run that you can see. Whoa, what a run! From 3k to 69k, double top, then go below, and we are below for a long time now, since June until March. We are more than 6 months below, and we can see that now we're breaking above this EMA, this weekly EMA, that indicates, as a historical statistics here, that indicates that most of the times we're above here, things are going crazy, we're going up. So we might continue going up after maybe a small pullback. That was my insight for today. That's what I wanted to say to you. Nothing here was a financial advice, as I said before. I hope you enjoyed the video. If you want, like and subscribe, follow me on Twitter, and we can share our thoughts about the market together. Thank you very much for being with me today.